The consumer price index data for the month of December is in, and it came in hot. Let's talk about what this means for the economy, the average person, and for Bitcoin. So, CPI came in at 2.9% for the month of December. So, CPI is the de facto measure of inflation that the Federal Reserve uses, and mainstream economists and most market investors are looking at this. And it's very flawed for a variety of reasons, which we'll get into. But this is what the Fed looks at to gauge the success of their dual mandate between keeping inflation low and also keeping the unemployment rate low. And the story since 2020 has obviously been this battle against inflation. The money supply increased greatly in 2020 as a response to the pandemic, but since 2022, we've seen disinflation. So this doesn't mean that prices are going down. It means that prices are going up, but the rate at which they're going up is going down. And so we saw that throughout most of 2022 and 2023. Throughout the second half of 2023, inflation, the CPI inflation rate stagnated around this 3.3% level. And then over the past 3 months, just when the Fed thought they had won the battle against inflation, we've seen 3 consecutive months of rising CPI. So they did their first overnight rate cut in September. CPI was at 2.4%, but then October 2.6, 2.7, and now 2.9%. And let's break down exactly what this means. Firstly, I want to look at the core consumer price index. So this looks at CPI, but it excludes food and energy prices. Now, why would we want to do that? We all eat and we all drive cars and use gasoline. So it doesn't make any sense to look at core CPI if you're trying to measure your purchasing power and how much it costs you to live and what the change in your prices are on a personal level. It doesn't make sense to look at this metric. But by excluding food and energy, we can get a more solid look at how monetary policy is impacting prices within the economy. So, for example, if you include energy in the basket of goods whose price changes you're measuring, for example, we had the war in Russia and Ukraine that had a positive impact on energy prices, right? Because one of the largest oil producers got, you know, kind of ostracized from the rest of the economy. That was a shock on oil prices and energy prices external from monetary policy. So if we're trying to solely zone in on monetary policy and how that's affecting prices, this is a good measure to look at. And it's been high, right? We've seen core CPI stagnate around this 3% level. It declined from 3.3 to 3.2, but generally speaking, core CPI is high above the target rate that the Federal Reserve sets. And I think this is going to continue to be the case in 2024 or 2025, excuse me. And I think it's really important to look at, right? Because one of President Trump's, commitments is to increase energy production within the United States. That's a good thing. Very good. It's going to drive energy prices down, which will likely manifest itself in a lower headline CPI towards the end of the year, simply because the energy component is going to bring down the whole basket. But core CPI is something we're going to want to keep an eye on because that's going to give us general insights into how monetary policy is affecting prices. And primarily, the reason that CPI has remained elevated is because the supply of dollars is increasing. In 2022, we actually saw a contraction in the money supply for the first time as far as this Federal Reserve data goes back. And this, of course, came after the massive parabolic increase of the money supply in 2020. But since the contractionary period in 2022, M2 money supply has been on the rise. And now I see the chart of global M2 posted a lot, and that's looking at all of fiat currencies priced in dollars, and it shows, oh, we're going through a contractionary period. But that's simply because the dollar is strengthening against these other fiat currencies, which we won't elaborate on for now. Another reason that prices are increasing is because the money supply is increasing because of all the debt at the federal level, right? So 2 straight decades of a deficit, federal spending deficit, meaning the government is spending more money than it brings in through tax revenue, and they make up for that by borrowing money, which at the end of the day is effectively creating money out of thin air. It's not quite as simple as that, but that is, you can the net effect is similar in that regard. And this, Trump claims to want to get the deficit down. We'll see if he's actually able to achieve that. When you look at what the vast majority of spending is, it's things that aren't going to get cut. So you're looking at Medicare, Medicaid, that's not getting cut. Social Security not getting cut. Defense spending, maybe, but probably not. And then interest on the debt, that can't be eliminated either. So This is the vast majority of the budget. Doesn't matter what he tries to do with Doge and Vivek and Elon. It's unlikely that any kind of budget surplus is ran. And if it was, that would be disastrous for the economy in the short term. And I don't think Trump wants to see that. So if we go back to this chart here, this is what a lot of the kind of short-term volatility in the Bitcoin market and in the broader equity markets has been based around fears of this strengthening dollar. So we're looking here at the dollar currency index, the Dixie, the DXY, measuring the dollar against other fiat currencies that are printed infinitely, right? And so strong dollar doesn't necessarily mean more purchasing power, it just means the dollar is strengthening relative to other fiat currencies. And this is going to have to reverse. Trump is going to have to get a weaker dollar if he hopes to increase onshore manufacturing, and he's going to implement these tariffs. He's going to need a weaker dollar to stimulate the economy. You see here, I put this white line from when Trump's first term began here in January. There was a peak in the Dixie, and the Dixie went straight down for over a year once Trump got into office the first time. And I expect that to be the case this time around, which is going to be very bullish for risk assets, Bitcoin, equities, US equities, etc. Now, what's very fascinating is this candle right here. So we're looking at the Bitcoin daily chart on today, January 15th. This is 8:30 a.m. when the CPI data released, and we saw CPI come in at 2.9%. There was a huge Bitcoin bid. It went from 97,000 to over 98,000 in a minute. Clearly, there's buyers with size waiting on the sidelines, and this CPI print came in. It was below expectations, so the market expected a little bit higher, and it came in low, but it still came in relatively hot, increasing on a month-over-month basis. I think the month-over-month price change is about 0.4% and then 2.9% on the annualized. So obviously, there's big buyers in the market. This isn't retail folks sitting around, waiting for 8:30 for the CPI data to come out and then buying Bitcoin en masse. This was very big buyers paying attention to what's going on with inflation, what's going on with Bitcoin, and using Bitcoin as the out against inflation, because what else can you hold beyond the thing that nobody can make more of? And then lastly, we're seeing interest rates for U.S. Treasuries. They're at historic highs relative to the past 10 years. They haven't been this high since 2008. And the government, of course, has a lot of debt, 36 trillion in debt, about 7 trillion of which is going to have to be refinanced in 2025. Right now, the blended average rate on that debt that needs to be refinanced is around 3.5%. Treasuries are here up north of 4%. So this interest payment line item is going to increase, which is going to be, pushing the deficit even higher. And then a couple more things we're going to look at here is the total debt to GDP, right? It's roughly 120%. So if you taxed all of the productivity in the United States for a year, literally made all of us slaves, all of that income was going towards the federal debt, you still couldn't pay it off in a year. And so what do they have to do? They have to increase productivity, quote unquote. They have to increase GDP. And one way to increase nominal GDP is to just print more dollars, right? If you print more dollars, there will be more trade in a nominal term. It doesn't mean we'll be wealthier in real terms, but then nominal tax receipts go up, and you can kind of devalue the debt that way. And then I mentioned earlier that CPI is a terrible way of measuring prices and inflation, and here's an example. So for me personally, I buy a lot of ground beef. It's a huge part of my diet, and so if I want to measure my purchasing power, I don't need to look at the basket of goods at CPI because it's diluted with a bunch of stuff that I don't actually purchase. And I recommend all of you do the same thing. I buy a lot of ground beef. How much has the price of ground beef changed in the past year? 7.5%. That's a massive increase. That's much, much larger than the 2.9% increase in CPI. And over the past few years, I mean, it's been 5, 6, 7, 8, 9, 15 back in 2024 or 2020, excuse me. And if we just look at the actual index, I mean, you can see here, 5.6 versus 3.8 in this time 5 years ago. So that's over a 50% increase in the past 5 years. And obviously we all feel it, right? Anybody who goes to the grocery store or the gas pump or is trying to buy a house or pay rent, you know that the prices have increased a lot more than what you'd be led to believe by just looking at the CPI. And one more thing we'll look at here is the median sales price of a home. in dollar terms, right? It's gone up. In 2020, it was 317,000, and today it's around 420,000. So that's a massive jump in just a very short period of time. However, if you're saving in Bitcoin, you've seen the exact opposite. You have seen housing prices fall 77% over the past 5 years. So in this time in 2020, one median house in the United States cost about 29 Bitcoin. Versus today, it costs about 6.5 Bitcoin. So when you save in Bitcoin, the things you want to buy, houses, energy, food, they get cheaper over time when you're saving in the finite asset that is Bitcoin.